Hey, what's going on, guys? Edward here with another video. Thank you so much for being here. Today, I know some of you guys were asking, and some of the comments, and also today, somebody asked me on Telegram that you wanted to see more about um, pairs. That because basically this channel is mainly for indices. um, I still, from time to time post some things regarding pairs. Now, I stopped trading pairs once I discovered actually indices. And I know some of you guys cannot maybe trade indices yet because, they move too fast. You rather maybe going with something slower. Okay, you know, so I will do from time to time, I'll try to do it from time to time and show some of the things that I used to do, the ways, the actual strategies that I had in pairs that work for me. But still, however, I remember, I always tell you, pairs they move a lot slower. They have a lot of noise. They have they provide more fake outs, and that's why I actually decided not to trade them anymore. From time to time, if I see a nice setup, I might be getting in, and still I still doubt on actually getting in and trading. But I will show you a nice pattern. I remember when I was starting trading and I was getting into patterns. I discovered this pattern called Wolfe Wave Pattern. So basically, if you want to know, just Google it like that. This pattern was very effective, and I do remember that this pattern repeats a lot, even in gold. I completely forgot about this. That even in gold, you can find this Wolfe Wave Pattern. I have not like tested now that I decided to make this video. I have not tested on indices, but I know that in pairs it happens a lot, and also in gold. Okay, so what is the Wolfe Wave pattern? It's basically a formation. It's a one, two, three, four, five. So the fifth wave, they call it wave. So every wave, so wave one, two, three, four, and wave five. The fifth wave, you will see that that usually the fifth wave breaks a channel. So we're going to try to find some formations right here. Just going on a random pair. I'm going to try to find some other pairs right there. So we'll give you an example of what would be a Wolfe Wave pattern. Sometimes the formations are very weird, but you will see, you will understand now. Let's see, for example, right here. Look at this. Let's go Let's go maybe with this tool here. I will try to just have an idea. All right, this is the first push. So this will be the one. Maybe this one is the two. You have the three right here and the fourth wave. Now this fifth wave, look what's happening. I'm gonna leave the line there. We're gonna try. We're gonna draw a line from wave one to wave what? This is the third wave? Yeah, one, two, three. This will be the third wave. So we're going to try to draw a line exactly from that position. All right, something like that. And even from here. Okay, so it's basically like a channel. All right, it created a channel. But you see the fifth wave right here is breaking this line, is breaking it. So it's basically a fake out. The fifth line, the fifth wave, you can see that is actually a fake out. Okay. And when that fake out happens, the idea for this is you don't need to get in right away on a, like many people might actually think that this is a buy. It's a fake out that is happening when breaks this line right here. So many people might actually buy, and this thing actually will melt down. So here's the thing. This is how you trade it. You usually make a sell. In this case, this is a bearish formation. So when the market starts coming back down very strong and it breaks inside the channel, it comes back to the channel. That's your entry point right there. Okay. Now, depending on what time frame they're like, I'm seeing this on a 4 hour. Right, it's a big time frame. That's a lot of pips right here. If you want to do, if you want to put the stop loss right there, that's fine. I know some people try sometimes to put it somewhere or just a few pips above the structure, depending on how big the formation is. But I will give you an example. Now, where to take profit in this formation? If you're, the entry is right here. If you're able to spot this formation, one, two, three, four, five. The fifth wave breaks this formation, breaks this channel. Now, not just because it's breaking, you're gonna, this is it. This is the Wolfe Wave pattern. No, you need to actually wait for the market to come inside the actual channel. Okay, that's your confirmation that this was just a fake out. Okay, so the fifth wave is basically a fake out. So you enter right there and your take profit. Pay attention. You draw your line from point one, right, from the wave one to the wave fourth. You draw a line like that, all right, that touches right there. So this point, basically from this point to this point, this is your take profit zone. This is basically your take profit zone. This line is called ETA, if I'm not mistaken, estimated. No, ETA. Let's see, forgot. Um, yeah, ETA. Yeah, that's correct. I think it's estimated time arrival. I think is the explanation for the ETA. Well, that is basically it. This this line right here, when you draw the line from wave one to wave four, right? You draw a straight line right there. This is your take profit zone. All right. And if you back test this, this is very, very effective. Let's try to find more setups like that. Let's see in the past. Sometimes it may not be forming it, or some pairs may not be forming this as much. So you will have to look for it. But maybe this one. One, two, three, four, five. It could be this could be a fake out. It could be a nice formation. Let's say from I don't know from here. So one, two. This point is basically the same high. So let's say here three, four, and then five. All right. So let's go ahead and draw. Let's go ahead and draw the lines. Right. So basically from here to there, and from here to there. Okay, so it's basically a consolidation formation. But you see that the market, yeah, it's very weird. This formation is not that good of an example, but anyways, the price did came back to the channel, but it was yeah, let's say you would have wanted to get in. It's a little too far away. It's a little crazy. Say you wanted to get in there, right? Stop loss below, and you enter when the market actually went inside the actual formation. Right? So it did went inside, but then it did a pullback. But following price action, it would definitely help. But look at this. I'm gonna draw the line from the one to the fourth. Okay. Look at that. Look at your take profit where it was. So it could be the market could reach anywhere in this line. So look at that nice push right there. So I know it doesn't look quite nice. It may not be that best for the example, but at least we're following the waves. So which is one, two, three, four, five. The fifth wave breaks this channel, right? This triangle formation. It breaks it. This is not a sign for you to sell yet, or I'm sorry, to buy in this case. You need to wait for the price to actually come back inside the actual channel or the actual triangle in this formation, right? It did came back inside with this candle. So let's say you wanted to get in there, boom, stop loss below. That then went hard, you know, it went up very nice right there. That formation. Maybe is not the best formation. You know how this thing is, how markets are, and the formations sometimes they're not gonna be really nice looking. So let's try to jump maybe in another pair. Let's go to Euro USD. And let's see. Sometimes you can find it, like I mentioned, it could be a bearish or it could be bullish. So let's see. Let's try to change the time frame. Let's try to go maybe 1 hour now. So you can see that you can spot this in any time frame. Let me see. No. So we're looking for a fifth wave, a fifth formation. This may look like it. No. Has a lot of picks. This pair has a lot of picks. Aha, this one. I think this one is a nice example. Yep, this one looks beautiful. Look at this. So again, we go from the push. Let's say from here. So this is point 1, 2, 3. Let's say this is the lowest point. 4. Now fifth wave, and look at that immediately. Thing just melting all the way down. All right. Now again, we're gonna draw the lines very much like that. You see the fifth wave is actually cutting, so it's a fake out. It's a complete fake out right there. Just back test this. Back test it. You see? This time it's forming a channel. Sometimes it's gonna be channel like that. Sometimes it's gonna be like a triangle formation. You know, doesn't matter as long as the market is coming back. So right here you see price. This is a wave 1, 2, 3, 4, 5. The fifth wave breaks this thing to the upside. You see this candle breaking. You might think this is actually going to continue pushing up, and the next candle gives you a bearish engulfing candle. So it's a trigger. So at that point, maybe you can put the entry right there somewhere. You need to wait. If you're watching this on a 1 hour, guys, you need to wait for the candle to close. I know that maybe this one was too far away. You might think, this is too far away, but still, this is a pair. It's just 23 pips right there. It's not that far. It's not that big. And the take profit, well, it's not going to be that far either in this formation. Sometimes this formation is going to be very generous and give you a lot of pips. Sometimes it's just going to be maybe not that much. Like you see right there, this was the ETA, pretty much the ETA line. So the take profit would have been there. Let's say you want to trail it, you have other options to trail that drop. If that, it was a huge drop, you can definitely use the indicators for the TP strategy and the WMA lines to pretty much follow and track the actual line. So let's say this is a 1 hour. I'm going to have to scale in maybe 15-minute or 5-minute to actually follow it. Let me see if I can go back there where the formation was. I'm not sure if I can go that far behind. Yep, it's not going to let me. Yeah, it's not going to let me in 15 minutes. But yeah, you're going to have to play around with the time frame if you want to, scale in and trail your stop loss. Okay, where the heck? Where did it go? Where did it go? I don't know what I did. 1 second. Where did that formation go? I think it was here. Yeah. Yeah. So basically, this formation is to detect fake outs. Okay. It's basically that, detecting fake outs. Right? So right now you're seeing, okay, so one, two, three, four, fifth wave breaks the neckline and then comes back as strong. So it's important to know where to take your profits. Okay, I know this is not maybe a good formation right there, but like I mentioned, you can combine this thing with the indicators, so it will help you track and trail your stop loss. The WMA lines are perfect for this. For you can back test it. Let's go with different pairs. Go maybe GJ, CGVP, JPY. Let's see if we can spot something. 1, 2, 3, 4. No. 1, 2, 3. Could be this the third point. So 1, 2, 3, 4, 5. Perhaps. Yeah, maybe this was the one. Could have worked. Yeah, look at this one. Anyways, it's a big push. But anyways, this is the first one. 1, 2, 3, 4, 5. And now pushed up very strong. All right. So let's draw the lines. Okay, from 1 to 4, you see it caught it right there. Now from here to here, that's basically the other channel, the other formation. Where was your entry point? You see it, engulfing candle right there. Price coming back in inside a small channel, stop loss there. And the ETA, let's see if it actually hit it. Yeah, it did it. Look at that. So nice TP right there. Yeah, sometimes the market is gonna this formation, depending on the day, depending on whatever's happening, this formation is gonna give you nice pips. Like you were risking 30 pips to win 70, so it's a two to one risk to reward, a little bit over, a little bit more than 2 to 1 risk to reward. So nice formation. So the idea for this guys is for you, to keep practicing, keep looking for this setups informations. Okay, some pairs are gonna show it more often than others. Sometimes you may not see it that often, but that's the idea. If you still have the patience to trade, nice head and shoulder right there. If you have the patience to trade um, pairs, yeah, I'm pretty sure you're gonna find a lot of setups like this, depending on the day. Let's go. Let's see, CAD JPY. But I think that will be all pretty much for the example. So remember, the formation for that. Let me draw it here. The formation for that is gonna be the push leg, right? Very, very important. Push. So it's going to create basically a channel. Sometimes it's like that. So this is the fourth. The fifth one right here, it will be something like that. It will break it, right? And maybe this push is very strong, very big. So the idea for this is to draw the lines like that on a channel, okay? Basically like that. So this is wave 1, 2, 3, 4, 5. The fifth wave has to break the body of the candle has to be broken as the actual trend line, okay, the actual channel. It broke it. Now your entry point is when the next few candles come inside the channel. That is your sign for you to actually getting on a buy. So stop loss below, and your take profit. You go ahead and measure from point 1 to point 4 right there. And that is your ETA, estimated time arrival, I think it means. So anywhere on that line it can touch it. Okay. So that's basically it, guys, for this video. I hope you like it. This is called the Wolfe Wave Pattern. You can also Google it. You can see more examples for this. Let me know in the comment section if you want to see more videos like this regarding, pairs, or you just want to see just videos regarding indices. All right. I haven't tested this actually on indices. You can actually test it on gold. It works a lot. Since gold, makes a lot of fake outs. So it's basically it. This setup is to spot fake outs whenever there's a channel like that. So it's really, really nice information. So I hope you guys like it. Thank you so much for being here. I'll see you guys in the next episode. Take it easy, guys.